Hi, this is Zak Mir with the Bulletin Board Heroes here at Zak's Traders Cafe for Friday the 7th of March. Starting off with the FTSE 100, which is slightly disappointing, but probably not as bad as it could have been. We lost that January uptrend line there around 80.80, and below that there was the risk of a move down to 8600, which actually so far we've avoided. Worst case at the moment would be down to the 50-day line, 85.50, but as we said, not looking too bad considering, and obviously given the state of some of the other markets, which we will see in a minute. Moving on to the DAX, and here still near the highs and also performing well. The top of the channel there, 23,500, that's our near-term target, especially while we remain above the old February resistance, 22,900. Worst case has got to be the floor of the channel there, 22,000, but the way we're going at the moment, we might be able to avoid it, although it's still a little bit early to be too keen on that scenario. Moving on to the Dow and the tariff debacle that we've had. Here, we went down to the floor of the channel there after having a big battle with the 50-day line a couple of weeks ago. Had RSI failure at neutral 50, which brought this market down. Still got the risk of a test of the 200-day moving average at 41,800. And as I've said before, we haven't been below the 200-day line for over a year back in the autumn of 2023. At the moment, still the chance of a move down towards post-September support there. And that does tie in with the 200-day moving average. On to Bitcoin, which had a bit of a boost with the strategic fund news, but now has just decided to go mad in a range between the 200-day line, 83,000, and the 50-day line there at 96,000. And difficult really to say which the direction this market's going to choose, apart from the fact we seem to be also trading either side of the old neckline resistance and support around the 90,000 level. And I guess probably say that I might have to have one more test of the floor of the channel there from back in March last year and the 200-day line before this market has a chance of pushing higher against that falling 50-day moving average. Moving on to gold, and here either side of its neckline as well in the recent past, so 28.95, that neckline support. It was briefly broken the other week, but above that, still looking at the top of the channel there as high as 30, 10 or even 20 by the end of this month. RSI in the right place at 57, so that is helpful. Worst case on the downside at the moment, the 50-day line, 28.10. Moving on to pound dollar, and here it's just always enjoyable to see this market rise after being given the big sell on the 10th of January by Deutsche Bank. Well done to them. Wish I could have a job there. Currently we've got the situation where the 200-day line is flipping to the upside, 127.80, and that's joining the 50-day moving average. So that sort of suggests we're in the very strong part of the cycle. Top of the channel there at 133.20. And we're looking for that while we're above the 200-day line, 127.90. But that sell from Deutsche Bank on the 10th of January, one of the classics in which investment banks tend to call the opposite end of the market so well. Moving along to the stocks, and starting off with Andrada, where it seems, I'd say we're probably in a sort of selling climax zone now. We've had the shares falling slowly for over a year, and I think the denouement is on its way in terms of a turnaround. The current situation is that we've had bear trap gap reversal, so we've had a bear trap below the January support there, 1.95, and then gap back above it. So that for me is a decent enough signal to at least get the shares back to 3.1 pence. If you're a fan of the shares and looking for a bit more, which is obviously it's not 3.1, it's not a lot, then maybe up to the top of that triangle there, 3.25, could be on its way while we're above, at least while we're above the 50-day moving average at 2.2 pence. Also, bullish divergence coming in there as well, so the low for March, but RSI trace, which is nice. Next up, a bit of comic relief here with Aberdeen, and it looks like the change of name is, well, at least the run-up to the change of name was a good help, and we've already had two gaps to the upside, and looking for the market to stay above the old October resistance, 174 pence, And while it does that, we've got a chance of heading up to the £2 area even as soon as the end of this month after the name change, running up into also a golden cross between the 50 and 200 day lines. Avacta is a stock which probably should have risen a bit more today after today's disposal news, but the battle is still the same as it was described yesterday. We've got the old February support there. 39 pence, need an end of day close above that to give us a move to the 50-day line, and the old broken support line there just under 46 pence. Otherwise, there is a risk of a partial or even full retest of recent support towards 30 pence. Moving on to a stock I covered yesterday, and it seems it was much appreciated by the person who asked for it, and you also can see that there's been a decent effect at Catenai, or Catenai, with the push through the recent resistance, February resistance of 0.17. I did suggest that that could be a scenario, and initial target here was the 200-day line towards 0.21, but we are looking for and hoping in our dreams that we could get to 0.33 by the end of next month, which is the top of that rising trend channel base, and at least the call from yesterday is already up nearly 15%, which is a nice feeling. Stock which has not moved, which maybe should have moved, is Capital Metals. It was up a little bit yesterday. It is a benefit or theoretical beneficiary from the Ken Mir takeover offer. This company with mineral sands has some of the same commodities, let's say, and looking for a resistance line there at 1.7 pence to break, and a retest of October resistance through 2.5 pence, maybe by the end of next month or even sooner. The key here will be to see if and when the 50-day line, or when I suppose the 50-day line will start rising. We had a good key reversal to the upside yesterday, but just need a bit of backup from that 50-day moving average. We've already got the RSI above the neutral 50 level. Onto a stock which has moved and is in titanium, like Ken Mir. Here you can see we've broken the February resistance there at 10.4 pence, and above that we've been looking for 13 to 14 pence for quite some time. It looks like we'll get that perhaps even as soon as the end of this month. If you look closely, you can see there's already been a golden cross between the 50 and 200 day lines, and that has obviously helped the cause, and the shares rising as I speak, which is nice as well. Onto a stock which you can't resist looking at, just because it hopefully will piss off the bears. But here you can see there's a rising trend channel been in place for Eurasia. Clearly, it's very heavily geared to the outcome between Russia and Ukraine, which sort of ebbs and flows on an almost daily basis. Last Friday was obviously rather painful, but we do have the shares following that uptrend line in the RSI window. And the overall message here is now above the floor of the channel there at 4.4 pence. We're looking for the shares to get up to 8 pence, even though they seem to be chilling out a bit after the big rise that we had at the beginning of February. The other point to note is that RSI is at 57, which is in the best place for an ongoing recovery in the shares. A good performance from Greatland Gold over the last couple of months, I suppose, since the final bounce off 6 pence. Give it 8 out of 10 at least. We've just been close to the second target there, around 9.7 pence. Hopefully we'll get that over the next few sessions, especially if gold goes up itself. After that, we've got a new leg higher, potentially, which is from an old November 2023 resistance line projection, as high as 13 pence. So we'd look for that by the end of next month, while we hold above the 8 pence area. On to one of the best calls of the year to date, and very proud of this one, given that it was not called after a little bit of a bounce. It was actually called at the low, where there was a bullish divergence there, so around the 0.25 pence level it was called up, and we were looking then for a fill of that gap up to 0.4, which would have been a good result, but the shares were done much better than that. They've even exceeded what seemed to be a pie in the sky target for the end of next month at 0.68. And now above 0.68, we're actually looking for the shares to head up as high as 1.5 pence. And that would be quite a triumph for the people who got into the last placing, or that situation in February. I think the company raised £3 million at that time. So the company all cashed up there and ready to go, especially while we're above the previous target there at 0.68. On to a situation not quite as good as that one, but you can't win them all. But it has actually gone up. Miriad advertising a very difficult situation. Obviously, one's cognizant of the fundamentals here rather than just the chart. But 50 and 200 day lines, or the 50-day line at least, rising at the moment. Bounced off 0.24 or 0.23 twice, and above that, looking for the 200-day line and the top of that rising trend channel base at 0.43. Hopefully by the end of next month. Behave ourselves with the hammer candle yesterday and the RSI 50 rebound above, the RSI rebound above neutral 50. We might get there, and we deserve to get there by the end of this month. Moving along to Pantheon, where I basically just include the stock so I can say drill, baby, drill, but there is some charting merit as well. We've opened at the low and currently at the high of the day, so it looks as though our 80p target should be on tap pretty soon, hopefully by the end of this month, while we're above the floor of the channel there at 57p. You can also see we've had an RSI 50 rebound, which has helped the cause today in terms of the share price rise. Moving on to a stock which is rising very sharply on no news yet, which is one of the favourite things to notice in the small cap area. Phoenix Copper, obviously everyone's waiting for only one piece of news here, and hopefully maybe somebody's guessing that it's on its way, but even if it's not on its way, we've got a wedge breakout here. We've got a rebound, bear trap rebound off the low, so bear trap rebound from below last month's support at 3.1p above that. Looking for a retest of up to 8p, which is post-November resistance. If you're a fan of the shares and hoping that this is the big move, the big one, that is the top of the channel there at 8p, and let's see if we can get to that by the end of this month, or ideally by the end of this week. Upside argument valid while we're above yesterday's breakout around 3.5p. Finishing off with a stock which is almost impossible to chart or do anything else with. You can see the roller coaster ride that we've had over the last few months. Russian mountain ride might be the politically incorrect thing to say, but anyway, here we've had a bear trap rebound from below the 50-day line. There was a gap high yesterday, but we filled that gap and have bounced, and another bounce basically at that gap area around 1.2p. So at least you can say while we're above 1.2, we could head to the top of the range of 1.8, which might be enough for some punters to shoot at. That's it for me today. More updates over the weekend.